If you just formed an S-Corp this year and someone in a Facebook group told you that you could rent your house to your own company for 14 days at $3,000 a day and pocket $42,000 tax-free, I need you to pause before you do anything. That story is technically legal. The version most freelancers actually execute is not. And there's a 2023 tax court case where 3 shareholders tried exactly this play, deducted over $290,000 in rent, and walked out of court with a deduction of roughly $500 per meeting. Not per day, per meeting. So let's talk about what the Augusta Rule actually is in 2026, why it's still one of the best moves an S-Corp freelancer can make, and the specific paperwork that separates a clean deduction from a Sinopoli-style disaster. The rule itself is buried in Section 280AG of the tax code. You can pull it up on Cornell's Legal Information Institute if you want to read the statute yourself. Here's the plain English version. If you rent out your personal residence for fewer than 15 days during the year, the IRS lets you exclude every dollar of that rental income from your gross income. Federal tax on it, 0. The IRS confirms this directly in topic number 415. Under 15 days, you don't report the income, and you don't deduct any rental expenses either. That's the whole magic trick. And notice the language, fewer than 15 days. Not 14. That distinction matters because if you rent it out on day 15, the entire year's exclusion collapses and every dollar becomes reportable. Not just the extra day, the whole thing. So 14 is your ceiling, full stop. Now here's where it gets interesting for freelancers. Your S-Corp is a separate taxpayer from you. So the S-Corp can rent your house from you, say for a quarterly strategy meeting or a board planning session, pay you rent, deduct that rent as an ordinary and necessary business expense under Section 162, and you personally exclude the income under 280AG. Two sides of the same transaction, both tax-advantaged. My take is this is one of the cleanest legitimate strategies in the code for S-Corp owners. And honestly, most freelancers who formed an S-Corp in the last 2 years have no idea it exists. But, and this is the part the Facebook gurus skip, it only works if you have a real second entity. If you're a sole proprietor or a single-member LLC that has an elected S-Corp status, this strategy does not work for you. The IRS sees a disregarded entity as you renting to yourself, which is nothing. You need an S-Corp, a C-Corp, a partnership, or a multi-member LLC. No entity, no Augusta Rule. Let's talk about Sinopoli, because this case is the reason I'm making this video instead of a quick tweet. In Sinopoli Viva's Commissioner, decided August 2023, 3 shareholders of an S-Corp paid themselves more than $290,000 in rent over 3 years for monthly meetings held at their homes. The IRS audited. For 2015, the deduction was disallowed in full, $0, because there was no meeting documentation at all. For 2016, the court allowed $6,000. For 2017, $4,500. That's it. And here's how the IRS got to those numbers. The revenue agent literally called around to local venues and found that meeting space accommodating 500 to 1,200 people was renting for about $500 for a full or half day. The tax court then called even $500 per meeting generous. So when someone tells you to charge $3,000 a day because it's your business's money, the tax court has already told us in writing that reasonableness under Section 162 caps you at local comparable rates. Not your rate, the market's rate. I work with 1099 earners on tax and retirement strategy, and the pattern I see over and over is people copying a template off YouTube, charging $1,500 a day, doing 0 paperwork, and assuming the fewer than 15 days rule protects them. It doesn't. Section 280AG protects the income exclusion on your personal return. It does not protect the S-Corp's deduction. Those are 2 separate legal tests, so here's what I'd actually do if you want this deduction to survive an audit in 2026. First, get 3 written quotes from local venues, hotel conference rooms, co-working day rates, event spaces, for a comparable meeting size. Save the emails or the screenshots. That's your fair market value file, and IRS Publication 527 explicitly defines fair rental price as what an unrelated person would pay for similar space in your area. Second, write a one-page rental agreement between you personally and your S-Corp, specifying the date, the space being rented, the purpose, and the rate. Third, and this is the one Sinopoli turned on, for every single meeting, keep a dated agenda, minutes, and a list of attendees. In Sinopoli, the shareholders could only produce notes for 12 meetings in 2016 and 9 in 2017. Every undocumented meeting got zeroed out. Not reduced, zeroed. A couple more things people mess up. If your S-Corp pays you more than $600 in rent for the year, the S-Corp generally has to issue you a Form 1099 MESC with the rent in Box 1. You then report the gross on Schedule E and back it out with a 280AG exclusion. This is the paper trail that keeps the IRS matching program happy. Skip the 1099 and you've handed an auditor a thread to pull. Also, do not try to double dip with your home office. If you're already claiming a home office deduction on 200 square feet of your basement, you cannot rent that same 200 square feet to your S-Corp under Augusta. The rental agreement has to specify different space: the living room, the dining room, the backyard for an outdoor planning session. Different square footage. This one trips people up constantly, and it's an easy fix if you plan it before you sign the agreement. How much is this actually worth? Depends on your bracket, your state, and how many legitimate meetings you can document. But run the math with me. If you're in the 24% federal bracket, you hold 4 documented quarterly strategy meetings at a defensible $600 per meeting. That's $2,400 of S-Corp deduction. Federal savings around $576, plus state, plus you avoid the roughly 15.3% self-employment layer because it flows through the S-Corp as a rental deduction rather than wages. If you can defensively justify 8 meetings at $800 each, say you host a client advisory day, a Q4 planning offsite, a year-end review, you're at $6,400 deducted and real tax savings north of $1,500 for maybe 2 hours of paperwork. That's the honest ceiling for most solo S-Corp freelancers. It is not $42,000. Anyone selling you the $42,000 version is selling you an audit. One more nuance worth flagging. To even qualify for 280AG, the dwelling has to be your residence, meaning you personally used it for more than the greater of 14 days or 10% of the days it was rented at fair value. For your primary home, that's automatic. But if you're thinking of doing this with a vacation property you barely visit, run the personal use day math first. And note that a dwelling unit per IRS Publication 527 includes a house, condo, apartment, mobile home, even a boat, as long as it has sleeping space, a toilet, and cooking facilities. Your situation may vary depending on filing status, state rules, and whether your S-Corp election is even the right entity structure for your income level. I'd rerun that entity question anytime your net profit crosses roughly $80,000. I'm not a licensed CPA or financial advisor. This is general education for freelancers, not personalized advice. If this saved you from a bad Augusta setup, subscribe. I put out one of these S-Corp strategy breakdowns every week. Next week, I'm covering how to recalculate your Q3 estimated tax payment if your freelance income jumped mid-year, which is the exact situation half my inbox is in right now. And if there's a specific S-Corp or 1099 question you want me to dig into after that, drop it in the comments and I'll pull it into the queue.